And I remember it was a Saturday afternoon. He calls me. He said, I got an idea for you, right? I said, what is it? He said, I want to build a $1 billion e-com brand. And I'm like, shit, like that's like big boy pants stuff.
I say this to women all the time. It's like, what do you spend your money on? You have 85% of the consumer buying power in the household, and you're spending that money on behalf of your husband, your children, yourself. So are you investing in Aritzia when you buy only Aritzia and Lululemon clothes all year? Are you a shareholder? Then
Right.
they're like, oh, I never thought about that. And I'm like, yeah, like Aritzia went through the moon in the last couple of weeks. Like you could have been in and out on that stock. So you're spending money on, why aren't you investing in that as well?
A very warm welcome to the Creative Dealmaker podcast. I'm Carl Allen, I'm your host, and I'm going to be interviewing expert guests sharing investor strategies that will completely and utterly disrupt the market when it comes to buying and selling businesses all over the world.
Hi guys, welcome to the Creative Dealmaker podcast. Got two very special guests on the show today. I've got both my business partners actually, but I got Ross Turner, who, as you guys know, is my wingman, my business partner in eComfolio, and we've got one of our partners and advisors, Carson, with us. And Crystal's got a great story, great background, the absolute queen of crowdfunding, and there's a whole bunch of really cool stuff that we're doing. So we got her on the show today. So Crystal, welcome to the Dealmaker podcast.
Well, welcome.
Thank you. Thank you. I'm so excited to be here. So nice to see both of you too. It's the
Yeah.
beginning of a very exciting year.
Yeah. So Ross is in the Dealmaker house with me. We're going to NASA tomorrow. We were actually going to go and watch a SpaceX launch tonight, but they cancelled it. It's taken off tomorrow, but we're actually going to be at NASA with I don't think you've met Chris Moore, our other business partner, and Jared. They're flying in today. We got our upper echelon mastermind that starts tomorrow. In fact, we'll get you to the next one in Tennessee.
Nice.
We're doing in May, which will be really, really cool. But yeah, for our listeners on the podcast and our viewers, because we stream this on YouTube as well. Just tell everybody about you, where you've come from, what you've done. I know you're up in Canada right now, but yeah, appreciate you coming on. So who's Crystal Carson?
Who am I? Crystal Carson is in Canada right now in the first blizzard snowstorm of the year, which is not like Miami at all at this time of year. So, Canadian girl, grew up on the West Coast and raised by two entrepreneurial parents that taught me how to start businesses and grow businesses at a young age. My background is actually really in media and real estate. And interestingly enough, the two worked really well together through my 20s and into my 30s. And I got the opportunity to host a real estate TV show that was be a host on a real estate TV show. And Vancouver is one of those anomaly markets, global markets for real estate, where you can sell incredible properties all over the world. So it was a big opportunity for me to be on the show. Next thing you know, the magazine that I'm working with is getting called from Entertainment Tonight, Global News, all the major news outlets. They're wanting me to be a contributor, be on air. I was suddenly not just on this TV show, but I was like a personality in the media nationally. And I fell in love with storytelling. I fell in love with meeting people, talking to people. So I really pursued my media career, and then built my personal brand that way. And I got approached in I believe it's 2016 or 2017 by a $50 billion tech fund out of Asia that was investing in the North American market and actually moving into emerging industries, which were cannabis at the time, blockchain, renewable energy, lithium battery tech, and just basically everything that was, going to impact the world and change the world in a different way where people would actually see it and feel it in their homes. And they felt that they approached me to start telling the story for their companies as they were raising capital and taking them public. And I was like, I have no background in finance and I have never done it. Like, I'm no interest in the stock market either. Like, I'm not sure I'm the right girl for this. They're like, no, there's a new retail investor audience coming. And if you can figure this out on your own and tell the story, then you're gonna be able to help us create this market and you're perfect for it. And I was like, I really, really didn't want to do it at first. They finally convinced me to do it. They said, we promise we'll mentor you. We'll got your back. We'll support you through it. And I dove into it. And as I was starting to meet these companies and started to understand really the impact of what these businesses and sectors and industries are doing, I got obsessed with the fact that you weren't just starting a business, you were starting an industry. In that you were being sitting, and I was a girl sitting at the table in these meetings, and I was the only girl back then, even, like this is pre-COVID, this is 2016, 2017. I was really the only girl in the room at that time, especially at my age and no background in finance, but these guys just really supported me through that.
Nice.
And then I got to end up taking my real estate brain, and I started realizing, oh, okay, stock market is just, press releases, which is media and storytelling. And then there's assets, which is real estate. So I ended up selling a piece of land in Nevada to a lithium company to go public on the TSX. And I was like, oh, I can totally do this. So I just jumped headfirst into the capital markets. And I guess the rest is history from there.
Nice. So the real estate stuff's like really interesting. So like we're originally from England, right? Ross lives in Austin. I'm moving to Austin in a few months. And like what's crazy about America is how you can get really creative when you're buying real estate. Like in England, you can't, right? If you want to buy real estate in England, you've got to pay cash or you get a mortgage and you typically put 20, 25% down. I'm looking at some real estate in Austin. These are like $3-4 million homes, and I can buy them on these lease options. So I can put a couple of $100,000 down. Yeah, like a lease.
Have that.
Yeah.
Oh,
so,
they made that illegal in Canada, or they took that option out of the market. That's incredible. That's when I was in real estate. It was great.
So look at this house, right? $3 million, brand new house. It's stunning. It's like 6,000 square feet, like huge.
It's massive.
It's a show home. So it's got $250,000 worth of furniture in it. And they're selling it to me for $3 million. I got to view it though, right? Like my wife and I are flying over next week to see it, right? She's flying from England and we're meeting there, right? And like what's crazy, $3 million. It's I think 250 down, and then 10 grand a month for 5 years, and then in 5 years' time I got to pay the rest, right? Which that's crazy, right? It's absolutely crazy, and you can't do that in the UK. So
yeah,
this is why I want to live in the States full time. I get my green card in May, June. It's like insane. And what we're finding, like in one of the businesses we own, which is Dealmaker Wealth Society, we've got all these real estate investors that are coming in, and they're wanting to hedge away from real estate to do business acquisitions as well, which is really cool. And then obviously we've got the Econfolio brand that we're running together. We've raised all the capital. We're looking at doing tons of deals. But let's talk about Econfolio for a minute. So this is what I love about my protege program that Ross is now partnering. Like, I didn't know you 2 years ago. Like, he came into protege. Like, I remember calling you. You were walking the dogs. You were still in the UK, I think, before you'd made the move. I remember chatting to you, and like we became really good friends because we're both like Brits, we're lads, we like beer, we like football, or soccer, as we call it, as you guys call it in America. So we're jamming around like deals and stuff. And I remember it was a Saturday afternoon. He calls me. He said, I got an idea for you, right? I said, what is it? He said, I want to build a $1 billion like econ brand around health, beauty, wellness for women, right? And I'm like, shit, like that's like big boy pants stuff. Like I got people in my program, they're buying like a $500,000 plumbing company, and that's great, and I'm happy to coach them, support them, help them get financing, and they're buying those businesses and they're doing great. But like $1 billion, nobody ever in my program approached me and said, I want to build $1 billion business. And like, it's a testament to like protege that I can partner with people and we can do all this stuff. So we've raised the capital. We've just filed in an LOI in the last 10 minutes.
Oh, cool.
Well, I won't name the name because this will probably go out before we close on that deal. But we're paying 16.5 mil for a business doing $6 million of EBITDA. And we're only paying $5 million at close.
Ooh.
Highly, highly, highly creative deal.
Yeah.
And again, this doesn't happen in the UK. So, people watching in the UK, deals in the UK are a lot more rigid. You can't get as creative as you can with deals over there. But let's talk about Econfolio. let's talk about that, and then let's talk about what Crystal's doing with us on, even though like we don't need the capital for deals, we're crowdfunding to get all those investors in, because then we're going to IPO this business probably within the next couple of years. But yeah, let's talk about that a little bit, because that's like bang into your wheelhouse of that retail capital market and getting crowdfunding. Yeah, so let's talk about how this crowdfunding works for people that don't know.
Sure.
Right. So it actually was Obama that brought it in 2015 under the Jobs Act. And really what it is democratizing capital raising and democratizing finance. So the two pieces of the puzzle is that founders need to raise money, and they are, instead of going through the VC route, which obviously is very challenging and can be very hard on an investor, or sorry, on a founder, that they just have to exit. By doing equity crowdfunding, you have the ability to raise capital online through your communities, fans, followers, and network, right? And it allows, the big thing that this Jobs Act did was that it allowed unaccredited investors to invest in startups. So a lot of these businesses would go to Silicon Valley Bank, for example, or, they'd be going that 1% of wealth in the world would get access to these deals in the seed round, early stage. By the time the average investor, and especially an unaccredited investor, they'd be buying the stock in market with a very low opportunity. So that was the side for the retail investor. On the founder side, it gave them an opportunity to really raise money from people that believed in them, rather than people that are trying to grind them.
Like a Kickstarter type deal.
Yeah, like it's a much more, it's almost like thinking about it like, that whole Kickstarter concept, but it got much more sophisticated, because with the Reg A, you can raise up to 75 million. And it's based, with unaccredited investors. And now you think about this, you can put your raise up online as long as you have, so you go through your process with the SEC, your lawyers, all, your accountants. You can do a Reg CF, which is up to 5 million. You can do a Reg A, which is up to 75 million. And what this enables you to do is actually, just like e-commerce, you can market the investment opportunity and you can market the business opportunity to the audience the same way that you do your product on an e-commerce site. So I really call it like the Shopify for shareholders. Like that's the best way to think about it in equity crowdfunding. Yeah, right?
Shopify for sure. That's a quote of the show, isn't it? So a couple of questions then for you. So obviously, we know the answer, but for everybody listening or watching, explain what the criteria is to be an accredited investor.
Well, so the accredited investor, you have to have, the way that it works is you have to have a certain amount of assets, certain amount of income. It's over 200K, and then you've got a certain level of assets, and you have to have that verified through your financial statements, tax returns, and by accredited professionals. So whether that is your broker or your banker or your accountant. And so there is opportunities for online crowdfunding called a Reg D for accredited investors, where you can raise unlimited amounts of money online. But that accreditation process is a compliance issue, right? And so
that's 406B, 406C, yeah?
506 C.
506, yeah. 506, yeah. So
and that's interesting. It's still interesting that you can think about it this way. Like if you do have an accredited investor network, or, you have a broker dealer on it on the back end, you basically can go do your own roadshows. And if you have a network that wants to invest that's accredited, you can still make it as simple as a click to invest, rather than heavy paperwork and lawyers. So there's an opportunity there.
That's so cool. And then you can you could run Facebook ads technically.
Well, that's what you do. Yeah,
that's what you do. We will be doing with that.
It's literally e-commerce. The only difference is shares versus
Shopify for shareholders. I love
Shopify for shareholders. Yeah, it's like literally the only difference is you're selling shares versus your product. So when you think about that, I'll give you a good example. We've got one client that is a solar car, and they have a waiting list for this new car to come out. It's solar powered. And so they went out to their network and ran campaigns for the purchasers on the waiting list to be able to invest. And then those people went out and promoted it to their network, and it kept going and going and going. And it's gone, I think they've been raising for about 2 years. They've actually gone over 75 million. They're now at 85 million raised through their community, right? And they've done a very good job, but it's all about PR. It's all about your story, your narrative, right? Everything that sells your vision. And the big thing about the unaccredited investor is that you're not limited to North America. You must, as a company or an organization, be domiciled in North America, but you can market to anyone over the age of 18 with a credit card. So again, these investments,
Wow.
These investments don't need to be in cash.
And
You
what's
can
the
use your credit
minimum?
card.
Like what's the minimum investment people can make? Like, is it like $100 or $1,000?
That's set by the founders. So it's just
Right.
like any raise. What's your valuation? How much are you allocating? How many, what's the equity that you're allocating to that raise? And it really comes down to your terms. And that's why you have your legal team work through that with you on your structure and your cap table. And we've seen some of the NASDAQ listings come to do equity crowdfunding raises with us. So they'll do a Reg A alongside their broker private placements. And we've had companies raise, 30 million pre-IPO. And then they've got a totally different shareholder base that's actually an affinity shareholder. That's
Yeah,
not just looking to trade with the algorithms and with the,
that's so
like
clever.
the trading market.
That's so clever. So that's what we're doing
Yeah,
Yeah.
with portfolio.
that's exactly what we're doing with Econ.
Yeah.
Crystal kicked that off last week, actually, when I was out of office. But yeah, our raise, and because the way that we're staggering kind of our path to the IPO is we need 300 shareholders to facilitate the SEC regulations. So we're going to raise at least 1.2 million as a max. And then that leads us into next year. But we're working with a great group at the moment. Who I had the pleasure of working with last week.
Yes.
Those shareholders, they're going to get an insane return. Like if you think, like, I can't remember what cap they're coming in at, but presumably sub 50 mil. And then let's say they're dilute 50% over time as we list, and then we continue to draw down capital, leverage that up and do deals. When we hit $1 billion cap on the NASDAQ, they're probably going to make at least 50 times their money, which is going to be crazy. And they'll have liquidity in those shares.
There you go. That's a big thing. So Darren Marble, who owns Issuance, that's who Econfolio is working with, is Issuance. And he's like a founding father of the equity crowdfunding industry. He ran the first Reg A ever in the world. He worked in the marketing and launched the campaign and the program for this Reg A. And so he's been at the precipice and like the inception of this industry growing, and he's always on the leading edge. So that's why I really wanted Econfolio working with Issuance. And that's why I reached out to him on LinkedIn and was like, I'm following you. This was a few years ago. I was like, I'm following you and everything you're doing. And I just would love to connect with you and learn how we could work together. Have been working with them for a couple of years. And we actually, what's really cool is that Issuance's platform was the first to be approached by Stripe, which gave us the ability to really create this click to invest, because other platforms and other processes are very heavy with having to upload documents, having to do DocuSign. So you lose people along the way. And because Darren's such an innovator and he's such a leader in the sector, he's created the first really seamless e-commerce experience ever in the industry. And that gives you a leading edge, because when you've got a retail investor and they get stopped, we know e-commerce, it's stopped in the cart because you have to go do something, you lose that investor. So we've got an edge.
Sorry, Crystal. One of the key things that Darren showed me when we kind of went through the technology behind it, it's literally from click to purchase is a 40-second experience.
That is insane. I wish I'd have known about this a few months ago. So in one of our companies, just before you became a partner in KOD, which owns Dealmaker now, so I'm doing another roll up in the online education industry. So we started off with Dealmaker Wealth Society. We bought a real estate coaching company. We bought a online growth coaching company, and we got a whole bunch of other deals. So we went out, we raised $2.1 million of equity from our own students, right? So they're all fractional partners, and they bought into Dealmaker because they believe in the story about what we're doing, right? If I'd have known about Issuance then, I've got 250,000 Instagram followers now. I could have put a post out or a reel on Instagram. Probably raised 2.
Compliant.
Probably.
Probably raised it in half an hour.
Literally. That's literally it. Like, that's the beauty of it. And this is the whole platform, the whole concept of the industry is really democratizing finance. You as a founder can tell your own story. You can go to the people that believe in your product, and they can become a shareholder because they really believe, their users, their followers, they believe in you and they believe in the business you're building. And that's why I also think it's such an incredible fit for, eComfolio to be running an equity crowdfunding campaign and offering this democratization of finance, because it goes with the whole brand ethos and what we're trying to create for female founders is access to capital, access to opportunity.
So how rigorous is the valuation, right? So when you're going to market through issuance, like, and obviously as founders, we can set the valuation of the buy-in for equity, but how, like, is there like an SEC audit on those numbers? Like, are they like in eComfolio's case, are they looking at discounted cash flow models? Like, how does the valuation get vetted in that public market setting?
No, good question. Good question. So it's a bit unique in the way that okay, so I'm going to just go with the unaccredited investors right now. So we're going Reg CF. You can only raise up to 5 million. That's think about this in the way, like, it's very much a startup. So very much an idea, not necessarily a business with any revenue or, even a product in market, right? So you're thinking seed round, maybe even friends and family at that point when you're looking at CF. You can raise up to 1.2 with just a financial review from your CPA.
That's exactly what we're doing.
Yeah.
So what we're doing in Portfolio, we're doing a 1.2 million raise.
I'm making notes, guys. I'm gonna talk to my team later about this. Like,
get on a call.
I want to do this in KOD, like, because so what we did in KOD, right? So we've done this roll up of where we've got 3 businesses now. We've got Dealmaker, we've got a company called Partner Driven, which is a real estate investing and coaching program. And then we bought a company called Authentic Conversion, which is all about teaching online coaches, content creators, product developers, how to scale online, how to do customer conversions and all those different things. So combined, when you look at those 3 businesses combined, we're probably cranking on a run rate between $4.5 and $5 million of EBITDA, right? So, like, if you're
you're going to be in a great situation there for a CF. You're good, like, because that's really okay. So that's, you could do 1.2 of this a financial review and your CPA, and the auditing process and the criteria is much lower. Like, if for the Reg CF, the legal's a little bit more of the heavy lift, and that's where you get into the all your documents, bad actor checks and stuff. But it's a lighter weight approach. When you go into the Reg A, you almost got to think about it like it's pre-IPO preparation. So 2 years of audited financials, you're much more. But what I will say is that the SEC, one thing about America, Canada's not doing such a good job with this. Canada's making it complicated, but the US, compared to everything else in the financial markets that tend to be very complicated, heavily regulated, a lot of like throwing down the gauntlet on issuers and businesses from the regulators, the equity crowdfunding is still getting through with a lot of thumbs up and a lighter process, because they want to see these things happen. Like, they understand the value in it and the proof of concept out there has been successful. What I will say though is, like, that those 2 processes really, one's about 60 grand. The Reg A is about 60K to get live, versus you're looking at few $100,000 to get live with the CF. So or sorry, not a few $100,000, $10,000, $20,000. Like, you're looking at different fee structures, and just depends on who you work with. It can go up to, like, it can get more expensive depending on your business, but it's a lighter lift depending on who you work with on the CF. And it's a lighter process. You can be live in 4 to 8 weeks on a CF, whereas you're looking at Reg A could be 3 to 6 months.
Nice.
So your time to market. So a lot of what people will do, they'll go, issuers and founders will go, okay, either they're going to do a Reg D because they have a network of accredited investors, they want to go get some capital in, and they know how to do that, and they have access to accredited investors, so they can get up and live in a day and go, or they go the Reg CF, they can be up and be running the Reg CF, test the market, run their marketing campaigns while they're doing the Reg A in the background, and then they'll flip to a Reg A.
So a couple of questions for you on this, right? So first question is, like, you go out to like an issuance or a platform, and they provide the infrastructure. It's like a fintech. You raise all the money, and let's say let's say you sell 10% of your ordinary shares, and you've now got 10% shareholders in the business. So let's say there's 1,000 of these shareholders, right? Because there's a low minimum. Clearly, they're not all now on your board. So does issuance act as like the board advisor, the shareholder that sits to check that everything's being done correctly, or is there like no oversight from any of those investors at all?
Yeah, it's a great question.
Oh, yeah, that is a good question. So think of issuance as the fintech that's actually the compliance software for the transaction. So literally the same thing as Shopify, like in that capacity, right? But you need it to be able to receive the funds, transfer the funds, and sell the shares. Behind that, you've got your legal team, you've got your broker dealer. Now, the broker dealer doesn't act like a typical broker dealer. They do 1% across the board, and it's literally just a compliance element.
Yeah.
They're very light. They're just basically their compliance back in the backdrop. And then you've got your accounting team, and then you've got your transfer agent. So you've got a few different pieces going on behind the scenes. At the end of the day, they become your shareholders, and how you manage your shareholders is going to be the same thing as if you manage a public company. You're now going to have communications. They're shareholders though, right? So you're not looking at this. They're not getting on your board. They're not in controlling interest. They're not partners. This is like literally you got to think about these retail investors just like you would look at a retail investor in a public company. They need to be updated. They need to be updated. Material information needs to be disclosed. The same way that you would run any private company. Is just that you have a few more of them. So you want to have a communications plan and for how you're going to handle your investor relations. Basically, that's what it is. And it's just
that's so cool. So like in England, like if you go to like a Funding Circle or a Crowdcube or any of the UK guys, what they do is they'll go and raise all the money. So they got a big network of like investors that put the money in. And then what they do is they take a free piece of equity as well. I think they take 8% free equity of whatever's raised. So let's say let's say you're raising 20% equity, right? They'll take 8% of the equity as their fee. They'll sell the other 92% of the 20%, but then they sit on your board as a shareholder and then disseminate all the information down to all those.
Interesting.
So it's really cool that
that's very interesting.
Issuance doesn't do that. So here's my other question. Here's my other big question. So can you do this? So this issuance model of raising equity, can you do this on a business that you're about to acquire, right? So let's say you find an e-com company, and it's got a big following, right? And you want to buy that business. And let's say you wanted to do like there's a loan program in America called the SBA 7A loan program. So the way the SBA works, let's say you find a business and it's doing $1 million a year of EBITDA or cash flow, right? And let's say you agree to buy that business for $5 million, a 5 times multiple, right? Even though the deal that we're doing, we're paying 2.7 times EBITDA and it's doing $6 million of EBITDA, right? But normally you'd pay a 5 times multiple on $1 million of cash flow. So $5 million deal, what the SBA will do is they'll say, right, the buyer's got to put $500,000 in of equity. The SBA will fund $4 million over 10 years in the high 8s, low 9s. And then there's a $500,000 seller note. So the buyer's got to find $500,000. Doesn't have to be the buyer's own money. It can be a family office. It could be a VC. It could be anyone.
Basically need a down payment that they need to flow through into the company.
Yeah. So it's a down payment. So can you use like an issuance type platform to go and raise the $500,000 of equity to form the buying group to buy a business? Or does this stuff only work if you actually own the company in the first place?
You've been dying to ask this question for ages.
I have, yeah.
On the like from what I understand, although there's lots of creativity happening in this sector as well, and which I don't, it's like a more of a conversation on how things are evolving, but you do need to own the business. It needs to be done through the issuer and the owner on the raise. So depending on, so you can't do it to fund loans is basically like, you can't do it in that capacity.
No.
They are, one thing I just actually saw come through the mayor's office in Miami, and they forwarded it to me, was a group that is raising capital, almost like a fund that is financing businesses and then getting involved in the management. So And that wasn't, you wouldn't see that a year or two ago,
No,
right? Like there's
no.
really lines in the sand, and we're starting, I think market conditions are obviously impacting access to capital. So
Yeah.
we're starting to see creativity in this industry, in this sector. And I will say, actually, we've seen a group, investment group in the UK that's figuring out a way to bring equity crowdfunding like it is in America overseas into the UK market.
Yeah. Yeah.
So
Nice.
it's expanding, and people are trying to figure out how to make it work in their legal frameworks and their regulatory frameworks, right? So with that, I think it brings ideas, because you're not just in your own pond anymore. And America's the most creative pond, but you know, there's different ways that things are done around the world, and we're starting to see those come into play and those conversations start. So I think it's worth bringing that up to our legal team and seeing how, because they're really expertise. Nate and Chris are actually, I actually found them and met them at a conference and brought them in as partners for issuance, and they're domain experts in the equity crowdfunding. So it'd be worth a conversation for them to know when that would be possible.
But I've just had this really cool idea, right? So what a lot of my students are doing in Dealmaker Wealth Society is they're happy to go out and do SBA loans, right? But the problem is a lot of the sellers that are selling those companies, they're saying, well, you know what? I don't want to wait 4 months for you to go through the loopholes of the SBA, right? I want to sell my business now, right? Is there a way we can structure a deal? And we call this an annuity deal, right? Where you can start, so you take the business over, you start paying me a monthly payment for say 3 months, 6 months, and then that's going to give you time as the new owner to do refi of that, what would be a 10-year seller note, by doing an SBA loan and then cashing me out in say 90 or 180 days, right? Now, so that's perfect, because what that does is that takes away all the brain damage that the seller has to go through answering due diligence questions, jumping through all the SBA loops. The buyer, the new owner, can handle stuff. The seller can check out, retire, new owner of the business, they're getting income on a monthly basis, but then they can get that big check in 3 or 6 months time. So where I see this working is, so let's say you and I went and bought a company, an econ company, and let's say $1 million cash flow, $5 million deal, and we said, well, okay, we'll start paying the owner 25 grand a month, and then in that 6-month period where we're going to go and do an SBA loan, we can leverage issuance to go and raise the $500,000. And what we can do is we can target all the socials of the business we buy and all their customers. You could do an email campaign if it's got like TikTok following, or Facebook or Instagram or whatever.
Do you know how much gold we've just dropped here?
Do you think? So I just had that idea.
Absolutely
I just had that idea, right? And of how you can.
Well, let's set up a partnership with that, because that's what I do with issuance, is partnerships.
That would be
I'm into
really
it.
cool. That would be really cool, right? So yeah, I think we should definitely.
Perfect win-win.
You're Carl, you're getting it, and it's not that complicated, right? Like someone like you that's so sophisticated in how you structure and manage these processes. Once you see how simple this really can be, it's crazy that you're not doing it already, right? Like that's how you'll feel, because you're like, wait, this isn't that complicated. Like this is really done for the founder and for the average retail investor. This is not for the bankers, the brokers, and all the guys that usually control everything in these transactions. So it's a different way of doing business. And this is exactly the model that I do want to see happen with eConfolio, because I see that that a lot of these brands, they're, I say this to women all the time. It's like, what do you spend your money on? You have 85% of the consumer buying power in the household, and you're spending that money on behalf of your husband, your children, yourself.
Yeah.
And are you looking at the life cycle of your dollar? So are you investing in Aritzia when you buy only Aritzia and Lululemon clothes all year? Are you a shareholder? Then they're like, oh, I never thought about that. And I'm like, yeah, like Aritzia went through the moon in the last couple of weeks. Like you could have been in and out on that stock. So why aren't you getting in early stage companies where you even may know the founder? It's something that you're actually, you're spending money on. Why aren't you investing in that as well? Right.
What's really cool as well, like if you think about ecom, like especially with women, like they're not just customers, right? They become like raving fans. Like some of the deals that we've been looking at, the customer base, like the lifetime customer value of some of these customers is it's off the charts compared to like guys buying supplements or all those different things. Like there's a lot more loyalty with women in e-com. And you know why I like this crowdfunding play for these businesses, whether it's to raise extra working capital or to, you know, refi an acquisition or to even do bolt-on acquisitions. Like a lot of those people that will click to invest, you could almost have that as part of your product marketing. Say, hey, you know, we'll give you $100 free sample box if you buy 500
You're getting
worth of
this.
shares. So then these investors, right? They're not going to think like investors normally. They're not thinking about returns. They're thinking about like, I'm passionate about this product. I want to see it thrive. I'm going to be a customer for a long time. I'm investing in this because I believe in it. I love the product. I love the team. I love the customer service. I love the brand. Like I'd love to be a shareholder in this, right? It's like my Dealmaker proteges, right? I got 1,000 proteges down my program, and literally we thought, let's go out, let's raise a couple of $1 million from our community. We thought it would be a stretch. And I did a 30-minute presentation. I said, hey guys, here's the business. Like, here's what we're doing. Here's the roll-up that we're doing. Like, if you're passionate about wanting to be part of the journey, like we're going to give you an opportunity to invest. And like we had a $50,000 minimum, right? And we got massively oversubscribed just from our students saying, you know what, like you've helped us close deals, we're making all this money now. Like we want to invest in you guys and we want to be part of the journey and be part of the evolution. And I can see that transcending a lot of industries, particularly e-com. Like I've got students that are rolling up like CPA firms, right? So like Nikolaya, he's buying CPA firms like left, right, and center. You could almost like go to a CPA firm's customer base and say, hey, you know, we're going to roll up, we're going to buy all these other businesses, we're going to turn this into a much bigger entity. I can see a lot of those customers of like people that do tax returns, like, you know, grandmothers in Nebraska that do these little tax returns. So I can see this working in professional services, in e-com, even like I've got students rolling up in home services. So they're buying plumbing businesses, electrical businesses, and those customers, they're loyal to those service providers. So I can see those customers thinking, well, yeah, why wouldn't I be an investor in this business through these crowdfunding platforms? Like this is absolutely insane. Like this is like freaking my brain out. Like I think that
I'm so glad that you love it.
The way this could be deployed is crazy. So one thing though, right? I've got to get you onto my protege program. We do like we coach them 4 times a week for 90 minutes. One of our calls, we like to bring in really, really smart people like you. We've had Ross on talking about capital raising, building relationships. He's speaking at the Echelon Mastermind this weekend. We'd love to have you do the same. So I'll connect you to my team. Let's get you on the roster. Like you will blow people's minds talking about this stuff, and I'll like help segue it into how we can use crowdfunding as a tool for business acquisitions, because I've always known you couldn't use it in your cap raise to buy. But I think the way we're being creative now, structuring deals and having these like deferred payments, like we just put an LOI in today on this deal, this $16.5 million deal. We're staging the closing payment. Like a closing payment by nature is the day you close the deal, you got to cut somebody a check, right? You can now stagger that. So you can buy the business and make the closing payment later. And I see crowdfunding as the vehicle to raise that capital from a raving fan community that wants to support the business and the brand.
Then here's the thing, it gives the everyday person the ability to become a part of that business and part of that story. What Crystal said before is it's all about the story that you tell. That's everything. It's all about the story you tell. The vehicle is there, and like you've just delivered some absolute gold here. You're going to blow people's minds.
Yeah.
That's so awesome. Well, look, I pitched Ecomfolio, and what we were doing to Venture Miami and the Mayor of Miami was updated on it, and he was blown away. He's like, wait, what? Like, everybody's got female founder mandates, and that's great. Even the city of Miami does, but nobody's actually doing anything other than empowering. And he's like, this is the first business I've heard of in America that's actually putting their money where their mouth is and actually going to make these women successful, capitalize them, grow them, scale them. He's like, we got to roll the red carpet for this. Like, that was the feedback I received from the team. It's like, this is somebody that's actually doing it. And that's what's like, so, and then on top of that, like, I really want to tie that like the story together, the democratization and access to being part of the journey, because, you know, not only do you want to empower women and, you know, finance them and grow them, but there's a bigger opportunity in America right now, because only 3% of venture capital is going to women and only 1% to women of color.
What a shame. That
What
is such a shame. And
it is.
I think women make world-class entrepreneurs, you know.
All the data's there. I want to know another fun fact. So I've been talking to Darren about this, because he's like, Crystal, I want you to go out there and get these women. And I'm like, yeah, like I'm all about it. And we were talking about the stats and how can equity crowdfunding move the needle without VCs, without the banks, right?
Yeah.
And so we were talking about all that. And then I started diving into like, and I'm not sure if you're familiar with this, but the great wealth transfer is happening in this decade, right? And there's $30 trillion. Women in the next 10 years are going to own the majority of wealth and assets in America.
That's amazing.
Wow.
Yeah, and like McKinsey, RBC, like all the major banks, all like KPMG, there's actually reports. Fidelity Bank's the only one that's done anything about it that I'm really, really aware of, like publicly, but there's not many people talking about that. So like, not only do we have the opportunity to, you know, finance these founders, but there's a whole female funding network that's not being dealt with properly, not being communicated to properly, that we can also tap into and help grow women's businesses. And the data's in, they're better, you know, their businesses succeed and are managed better. Women are a lot less emotional with money, and they're able to multitask like at a higher level when they're operating a business. So like the data's proven that women are better shareholders, they're better business operators. Like the data's all backing this as a opportunity from an investment perspective. Like, it's not just like, oh, go help your friend. There's data to prove that investing in women is a good idea and actually sound idea on a financial level. So it's just, and that's the thing, is like, that's what I'm so excited about Ecomfolio, because the timing of this and what we can utilize to make this all happen with the equity crowdfunding and with, you know, with this great wealth transfer, we're kind of going to own this category.
It is a cool story, right? And like, you know, chops to you guys for kind of developing this. So initially when I started looking at this, like I think there's a difference between being an aggregator and being a roll-up professional. And you're right, it's all about the story, right? You know, when we pitched the Wall Street guys, like when we set up the facility, the 125 million facility, they looked at how many deals, 30 deals, 50 deals.
3 years.
And they batted them all away, and they looked at our story and they said, well, hang on a minute, right? You're two guys from England. You're doing a roll-up of e-commerce brands for women that are going to be acquired. You're going to have a woman C-suite that's going to run this, and you're buying like traditionally businesses and brands that are owned by women. So it's by women for women, serving women in the marketplace. And I think the cool thing is though, like when we ring the bell on the NASDAQ, Crystal, you can be there ringing the bell because you're part of our team. Me and Ross will be in the Irish pub down the street.
We'll be around the corner, staying out of the way.
Yeah. But funny story, when Ross and I were trawling New York back in March, do you remember that day when we took the helicopter from JFK to Manhattan? And then I was walking Ross around Wall Street where I used to work, right? When I was an investment banker back in the 90s, and I was working on Wall Street, there's an Irish pub literally across the road from the Bank of America Tower I used to work. And I used to go in there like most nights. And we went in there for a Guinness, right? So we're drinking Guinness in this pub. And I showed him the chair where most nights I would fall asleep. I was so tired. And they would wake me up in the morning and I'd go back to the office. So you and I will be in there when Crystal's ringing the bell.
The rest of the women are ringing the bell, Crystal. Yeah. We'll stay out of the way.
Yeah. So like I love this whole Venture Miami thing. Like I love like the Going Public TV show. that we've
Yes.
been trying to go on.
It's going to be crazy.
It's going to be absolutely.
And yeah, exactly to your point on I wanted to just bring this up too, is like you made a point earlier that actually no one really recognizes as well as you did, that by going and doing the equity crowdfunding and getting people to understand your product more, it has on the Going Public series that most of the issuers have not only seen capital raised, but they've seen their revenue go up because people buy more of their products. So people that may not want to invest will go purchase their product.
That's
So
right.
whether you're raising capital or raising your revenues, at the end of the day, you got money in the bank, right? So like there's two ways you can win by doing this that I think is really strategic. And that's one of the coolest things. For me, the Going Public series is the coolest thing that's ever happened in finance because you actually can watch.
It's going to be crazy.
It's going to be very influential. Like
Yeah.
when we do that and we have some brands, like some really, really strong brands under our umbrella, it's only going to help the brands. You know, it's going to expose us to a wider audience, and it's only going to help drive revenues and awareness of everything.
And what's crazy about this, right? So, you know, being a math guy that I am, right? He calls me Russell Crowe from The Beautiful Mind. That's ability to do like mental math on a whiteboard, right? But I'm thinking about the math of this. Like the way you win in e-com, or the way you win in most businesses generally, is the concept of like lifetime customer value, right? So obviously, if you look at an e-com business, and we've looked at thousands of them, right? You look at the income statement, and it's crazy. When you go through the income statement, the cost of goods sold for the product, whether it's a hair care product, a skincare product, eyes, teeth, nails, doesn't matter. The cost of the inventory that they're selling to the customer is always less than the marketing cost to acquire those customers, right? And a lot of e-com brands, when they win a customer for the very first time, they might even go in the hole. They might even lose money because they're betting on that customer being a repeat customer and driving that lifetime customer value. So think about lifetime customer value for a customer that's now a fractional shareholder, right? Like let's say they're investing in a hair care product, right? So one of the businesses we're buying soon is a volumizing hair care brand, right? So if you're a female and you're buying that product because that's what you need, are you going to buy the product of the company you've just invested in, or are you going to buy somebody else in the market, right? Because it's a market with lots of different companies. You're going to buy your own company's brand, right? So not only do you make an investment as a shareholder, you're probably 10xing that customer's lifetime value, right? And that drives multiples when you sell. It obviously drives cash flow. The margin on a repeat order is way higher than, you know, you might not make any margin when you first get that customer into the business because you're having to invest in that customer's acquisition. So I think this model can transcend a lot of industries, right? To your point about you can raise revenue and raise capital at the same time because that investor is going to buy the product or the service, and then they're psychologically going to want to keep trading, A, because they want to support the company, but B, as long as you're investing in a business that's got that repeatable custom. Like I never like to do deals where it's a one and out type of model, right? I always like businesses where the product is a consumable and like you lock them in. It's like one of my favorite businesses in the world is Lifeway, right? So we use the Lifeway. I don't know if you've ever seen it, Crystal. We'll send you some stuff, right? So the stem cell regeneration patches.
I'm obsessed with stem cell products right now.
Oh
so
my God. It's just crazy. It's like what, a couple $100 a month for a month's supply.
Yeah.
And they send you put one patch on your stomach, like just below your like navel, belly button, right?
And then one between your shoulders.
That's called the X39. The X49 goes on the back of your neck, and you stick them on, you put them on for a day, and then if you want, they have these energy enhancing patches, right? That you put like left and right. I think I've remembered it. The white one's beige, that goes left because white is right.
White is right.
That's how. So you put these on, and like literally within 30 minutes, it's crazy, right? It's absolutely crazy.
I want to know about it. I think that that's the world of biohacking, right? Like that's biohacking, that's longevity. Well, like that investment theme and that sector, because one of our themes is wellness, as I've been talking to Ross about this, but like longevity as an umbrella of both investment, because Melinda Gates just partnered with Techstars to finance the next innovation in the longevity sector, 32 billion from Saudi Arabia to invest into the longevity industry this year. Yeah.
That's insane.
32 billion?
Yeah.
Holy moly.
To deploy. No, we're about to see it. There's Chopra X. It's another group that my friend's a founder of, where Deepak Chopra's got a incubator and fund for going into longevity, because, and I have a theory that it's actually going to become the next ESG, because we're not going to retire at 65. We can't afford to in the system. So it's going to become mandated to have longevity healthcare implemented into corporate. So and you're talking, that's stem cells, that's biohacking, and that's wearables, that's at home, and that's subscription based, and it's immediate impact. I just had a stem cell facial this weekend with microneedling.
Yeah. Is it good?
Yeah, and insane. And then I went in the hyperbaric chamber. So my boyfriend and I, we went to this place where he was doing the biohacking, and I went and did this like stem cell instead of PRP, which has been a big trendy thing with your plasma. Well, over 30, your plasma probably isn't going to do much on your face, right?
I've heard a lot of good things about the hyperbaric oxygen chamber.
Yeah. Well, I went in, I did a level 3, which normally I'd be out for 2 weeks if I did a level 3 on my face. I'm 3 days later on a podcast. You guys would never know that I was level 3 all over my face for the microneedling, but they put on stem cells before and I put on stem cells after, and I did the hyperbaric chamber for an hour after my treatment. I came out of the hyperbaric chamber, 50% inflammation down, 50% recovered.
I want to say you do look glowing today on the
nice.
Yes, thank you. Yeah, that's that. I biohacked my face. I didn't inject any toxins. I didn't put anything in my body. I simply I hacked my own system, right? With the collagen production, putting stem cells on, and then I went and sat in an oxygen chamber.
That's amazing. So something I did last week, funny story I'll tell you before we wrap. So last week I was speaking at WealthCon in Vegas at Ryan Pineda's event, and Chris and Jared and a few of the other people were there. And one of the things we did on one of the afternoons is we went into one of these sensory deprivation chambers, right? Where you go in, it's like they put all this salt in the water so you float. It's like being in the Dead Sea. And then you close the lid, you put the earplugs in, and you can literally float. And there's like no sound, no light, it's pitch black. And I ended up falling asleep. And one of the really weird things about me is like I always sleep on the side.
Yeah.
I'm like 40 minutes into the hour, and all of a sudden, like I was having this dream that I was drowning. And I rolled over to the side, started swallowing all this freaking water. Oh, no. And then I'm like coughing and spluttering, and I'm barfing in this chamber. So I literally had to get out, and I gets out and I showers, and I goes into the waiting room, and Jared's there looking totally green. Same thing had happened to him, right? But he lasted about 4 minutes. 4 minutes in, he's like swallowing all this disgusting slug salt water. But it was
pretty painful.
Since then, my sleep, like, we all wear the Oura rings, right? I normally average about 4 hours of sleep a night. I just do. My brain's so active, I can't sleep, right? But ever since that event, and I did that chamber, I'm like 7, 8, 9 hours a night. So I'm waking up and I'm feeling like so restored in my sleep, and I'm wearing my patches. And it's really got me thinking into like this whole biohacking like thing. Like, we're going to go out this afternoon and drink a few beers and do that stuff. But now, I'm taking supplements now and all this kind of crazy stuff. Like I'm 53 now, so I'm a lot older than you guys. And I want to be doing this like in my 60s and 70s. Like,
Me too. Yeah. Start now, because you're basically your body's the real unfortunate fact is that your body starts to actually age and deteriorate rapidly at the age of 30. So you don't want to wait till you're older. You want to start now. And that's how longevity works. And I will tell you a principle of longevity. You should watch The Blue Zone, Live to 100 on Netflix. Watch that series. Because part of longevity is not just all the medical stuff and the biohacking. It's actually community dancing and drinking wine every day. So The
There you
I
people
like
go.
that
that.
are longest in the world, they all get together. They have community meals every day. They drink wine together every day, and they dance instead of exercising every day.
Julia and
They
Jess,
don't go to the gym.
200 then. If drinking wine every day, Julia and Jess will be 200 years old.
Exactly. I was like, converted, take me with you.
That's awesome. Well, hey, Crystal, we're conscious of your time. I know we've been chatting for nearly an hour now. Really appreciate you coming on, and I think it's been a really interesting conversation. It's really got my creative juices flowing. So we'd love to connect further on this stuff. But where can people find you? People want to reach out to you and connect. Where can people find you?
You can find me on my website, crystalcarson.ca, because I am Canadian. So .ca, not .com. And then follow me on Instagram, Crystal Carson Report. I'm on LinkedIn, and spelt like Johnny Carson, Carson.
Awesome. Well, hey, thank you very much indeed. I've loved this three-way ref. Appreciate your time. We'll catch up separately about Econfolio and Venture Miami and all this amazing stuff. And I'd love to have you come and talk to my proteges about some of this stuff. They would absolutely love it. So appreciate you. Have a great rest of your day, and we'll see you soon. All right, guys, that's a wrap for the Dealmaker, Creative Dealmaker podcast.